housing shortage was in Trinidad. We asked Edtrometer to do, I guess, a survey of what availability there was of housing in Trinidad. And at the time that he did that, there was only like 2 or 3 rentals left in Trinidad that were, you know, within that medium range that people could afford, and there were nothing else. There was one for $1,000, and there was one for 2 of them for like $600 or $800. Other than that, there were none. So that really can show you right there how acute the problem that we have here in Trinidad is right now. And it has not changed. If anything, it's probably gotten worse, and we're hoping that this space to create will help. It's going to take probably a year to 18 months to complete that, to alleviate some of the, and that's just the beginning.
Thank you, Mayor. So, as he alluded to, we have an issue here. So with that being said, I'm going to go to an overview before we, I'm sorry, we have the statistics first from Ms. Georgi Clark. Forgive me, I'm overstepping there. Would you please produce your findings, ma'am?
Sure. Thank you, Councilman. Mayor. I'd like to start off with the rental market in these statistics. And there's 2 realty offices that handle the majority of the rental property management within Trinidad. And that's TLC Realty and Southern Colorado Realty. And Jared Tortorelli and Monica Violante provided following statistics for these 2 companies. Together they manage 328 units that are available for rent. The average monthly rental costs are $325 to $750 for a studio or a 1-bedroom unit, $500 to $950 for a 2-bedroom unit, and $700 to $1,500 for a 3-bedroom or larger unit. Of those 328 units, there's currently 1 available for rent. There's a few that are off the market in remodels, but 1 available. Both companies require acceptable credit and background checks prior to rental, and both companies report receiving approximately 20 calls per week from folks seeking available rentals. Most all realtors manage a small number of rentals, and there are additional privately managed units as well. Like Councilman Lopez manages another rental unit. We feel these figures provide a good sense for the overall rental situation in Trinidad. In regard to low income and government assisted housing, Rosemary Shire, the Executive Director of the Trinidad Housing Authority, provided these following statistics. Low income rentals, there's a total of 151 units. The current occupancy is 95%. And there's a waiting list of 42 individuals or families. In elderly and disabled units, there's a total of 24 with 100% occupancy. There's a waiting list of 4. And Dwayne Roy with the Los Angeles County Rehabilitation Center provided the statistics in regard to developmental disability units. There's currently 23 units with an occupancy of 90%. And there's not a waiting list on that. So now I'd like to move to sales. In regard to the housing available for purchase, Stephen Kelly, Executive Director of Spanish Peaks MLS, provided the following statistics. There are currently 89 homes listed on the market. Of those, 12 homes, or 13%, are priced up to $100,000. 34 homes, or 38%, are priced between $100,000 and $200,000. 22 homes, or 25%, are priced between $200,000 and $300,000. And 21 homes, or 24%, are priced over $300,000. So half of the homes currently on the market are priced above $200,000, with only 12 homes priced up to $100,000. Clearly, this creates a barrier for lower income and first-time buyers. So, in conclusion, I'd really like to thank Jared Tortorelli, Monica Violante, Rosemary Shire, Dwayne Roy, and Stephen Kelly for all their assistance in gathering these numbers.
When were those statistics completed?
Within the last week. Does anyone have any questions on those?
did give a, I had heard that the average home that people were looking for was in that 150 range. Is that pretty accurate, that you're, and of course the realtors are?
I would think so.
So we have the 34 units or whatever around that, between the 1 to 200,000, correct? That's the-
Right.
Thank you, Ms. Clark.
Thank you.
So with the statistics that are shown to you, and if you'd all like, I have the copy of this if you want to just look at the paperwork that Ms. Clark has demonstrated verbally. I'm more of a visual learner myself. There is an issue going on here where a long time ago, you could get a home for $150,000, and that was considered a steal compared to people from the Denver market. Now rates are increasing, thankfully, for good reasons, but the same token, we are still somewhat of an economically depressed community for a lot of our locals, which are kind of barred from some of these other homes that are now being marketed up, and they are therefore not allowed to get rates that allow them to lend money or borrow money, I should say. So we have a need for assistance in affordable housing being demonstrated. So I have a quick overview here that I'd like to just kind of go through with you just briefly, and then we'll move on to the next topic. But Trinidad has, for the most part, always had a very affordable housing market. The last market rate development occurred in the 1990s and early 2000s. And at that point, it was discovered that there was a fairly healthy rental market throughout those years during that study. In 2013 and 2014, there was a global economic downturn, and Trinidad was also on the end of that stick, where we suffered major losses in the oil and gas industry, which was flourishing here for quite a while. Trinidad lost approximately 1,200 jobs to relocations to Texas because the jobs, well, they moved. So as a result, there was a flood of homes that were available. Now, the people who had lived here, who had purchased homes, they found that they weren't able to sell their home for the same rate at which they purchased it, so they ended up becoming either underwater on it, or they had just a home that they tried to rent out. And as a result of so many people with this exodus leaving Trinidad, there really weren't a whole lot of renters to fill these buildings and homes. As a result, this created a false market rental kind of situation here in Trinidad for our statistics. Rental rates, of course, dropped, and those who moved to relocate were then again holding that burden of holding property with not being able to pay for one or two of their new homes when they relocated. But in 2016, we started a recovery here in Trinidad, which was really nice. Just to let you know, the commercial real estate market loosened about 2012. And as a result of that, we had over 60% of our commercial buildings vacant. Now, as a result of economic upturn, we are now less than 20% in 2017. So we are filling up as our economy and our population are both growing hand in hand. Two housing studies were performed in 2016 and 2017 as a requirement for our CHAFA application for the Space to Create project, which is now just getting underway. In 2017, the rental market contracted completely, and there are none, if not very few, rentals available. Even from my perspective, because I do property management for my family, all of the rentals that my mother owns are all occupied and have been occupied fully for about the past 18 months. And when we do have a vacancy, it's only for about 2 weeks. And it is fortunate for us because then we're able to be more selective of our tenants, but at the same token, it does create a problem for other people who are coming to our community because of new economy that's being spurred. Lastly, the city is aware that housing development is coming, but right now we want to educate our community, our real estate agents, and other people on the programs to support all housing developments, again, from either homelessness up to a higher market rate housing situation. So that is the overview that I can give to you all, demonstrating where we have been and where we are going, hopefully in our future, because we are turning the corner here through great leadership on council, through staff doing great work in implementing our policy into tangible efforts. It has been a good thing. It's a good problem to have, like I said at the beginning, but still it's a problem nonetheless. So I would like to do some agency introductions for the people that are here. If you want to demonstrate a little more about what you could all bring to our table here for Trinidad, for our people in the audience, and then thereafter I would like to open it up to questions from the attendees for our panel up here, if you will. So, yes, sir, go ahead.
One item that I know, we've always tried to market Trinidad. I've always wanted to market Trinidad as a retirement community. And I've spoken to some people that would like to have like a retired, like a patio home where, the exterior is taken care of. There is nothing in Trinidad like this. So that is an area that I think for our retirees, if we're going to try to keep our local residents from having to move out of town, we need to figure out a way to find some patio type homes for these people.
So I will turn over agency introductions to Ms. Georgi Clark for now.
Okay,
Thank you, ma'am.
We'll start today with Mr. Bill Simpson, Department of Local Affairs, Division of Housing.
Thank you. Division of Housing is a program that's considered a gap funder. And what that means in a nutshell is we can do almost any type of housing, whether it be home ownership, rehabilitation, home ownership acquisition, multifamily, new construction, multifamily acquisition, rehab. But the caveat is it has to meet or has to serve families in certain income ranges. And you have to have looked for other financing, either through debt and equity or both, prior to coming to funding from us. That said, we have a very simple application process. You can apply to the Division of Housing the first week of any month. If you give us a complete application with all the requirements that we list, we can actually make a funding decision by the middle of the following month. So it's a fairly quick application process. We serve on the home ownership side families with 80% area median income or less. And we do have a program that serves Trinidad now that does housing rehabilitation. It's through the South Central Council of Governments. That program has been in existence for 20 plus years. They usually do about 30 to 35 loans or grants a year to families in that income categories to help upgrade their homes. Our multifamily program has been very active in Trinidad as well. We did a rehabilitation project for the Trinidad Housing Authority for a senior project a couple of years ago that was completed. Quite honestly, because of the upturn in the economy in Denver, they did not get as much work done as they would have liked to have, because we brought folks to do elevator and furnace boiler repairs down from the Denver area, because those are the only vendors that can do that work, so our money did not stretch as far as we would have liked to. But we at least got the building back in very operable condition. We're also a participant with Colorado Housing Finance Authority on the Art Space project. We hope that that'll start construction here fairly soon. Our priorities, quite honestly, we do home ownership, but our priority is multifamily rental housing. And more specifically, as Council had mentioned, we do have a very large allocation of funds for permanent supportive housing. So that's a priority, but we'll do almost any type of housing development that makes it's financially viable and market driven, and you have the resources from both our money and other resources to make that project happen. So we're a pretty creative organization. We can do very small projects. We've done as small as 2 or 3 units at a time on the multifamily side to actually hundreds of units in one application. So we can do a lot of different things. So anybody that would like to talk about specific projects or developments, I think we're going to sit up out here afterwards, and I'd be happy to try to explain specifics of that. But very quick turnaround, and we can do lots of different things as long as it makes good economic sense. And we only have a few minutes apiece, right? Okay. So I can only talk. I talk all day long.
No, I think you're done with yours and mine, so we're good.
Can I ask a question? So Bill, you say you partner, so what % typically is the Division of Housing lending on their projects?
We're in one of those catch-22 things because we have our stated policy is we're a gap financer. So if we work with CHAFA, on a tax credit project, normally the funding permanent loan comes from either CHAFA or HUD or something like that in a permanent mortgage, and then they have tax credit equity. So we're going to be a fairly small player in the big scheme of things on those projects. But we have done smaller developments that don't include CHAFA. They may include on the financing side, but not the low-income housing tax credit side. For example, in Silverton, we did a 12-unit project that was totally financed with funds from Department of Local Affairs and local bank financing. So that's an unusual thing for us, but sometimes you get a project that's so small, it just doesn't make sense to go to some of the larger resources like the low-income housing tax credits. So we try to be creative in making those things work. But I'd say our normal thing is we try to do $10,000 per unit or less, which obviously won't pay for much of a project. But in all honesty, a rural project, we've exceeded that limit substantially, just to be perfectly honest.
Thanks.
Thank you. Next we have Jeffery Burton, Colorado Housing and Finance Authority.
Actually, I'm Jeff Burton. I'm with the U.S. Department of Housing and Urban Development. I'm the Director of Program Support for Single Family FHA. So I'm just going to speak briefly about our FHA products and how they serve your community. Thank you on behalf of the U.S. Department of Housing and Urban Development for inviting us, Mayor, Councilman Lopez. So we love coming up to the communities and letting you know what's available from our agency to support your community. And I have my counterpart that does multifamily, as well as one of my coworkers here who is an underwriter. So we have a lot of questions we can answer at the conclusion of everyone's presentation. FHA as a product serves a couple of important functions in the mortgage market. One, FHA is one of those products that is there when other products fail. So in 2009, 2010, 2011, you saw FHA market share go from somewhere around 6% to almost 80% of the mortgage market. Now, at this point, with the traditional mortgage products coming back into the marketplace, we're seeing FHA down around 4 or 5% again. And that's completely normal, and that's what's expected. One unique thing that a lot of people don't know about FHA is that FHA is funded by the folks that are using FHA. Even though FHA did have to go back to Congress and make the fund somewhat more solvent back in 2011 due to the mortgage meltdown and a lot of the foreclosures, FHA is funded, not only are all the insurance in force funded by the fund, but also everybody that works in FHA is paid out of those revenues coming from the mortgage insurance premiums on those loans. FHA serves almost every community in the country. Now, some to a differing degree, as USDA will demonstrate. The more rural you get, the more you see a shift away from FHA serving minority and underserved communities to USDA serving more of those communities. FHA has universal lending standards for the most part that lenders are required to meet. They can put more restrictive covenants and overlays on top of those loans, but FHA is pretty liberal. USDA is a little bit more flexible with the deals that they can do, as I'm sure he'll explain. But one of the amazing things that FHA has been able to provide is servicing the underserved. Whereas the traditional mortgage market typically serves minorities at about a 6% level, FHA is about 33%. So about 33% of all FHA mortgages go to people that are identify themselves as minority. 56% are low to moderate income home buyers. And then when we look at first-time home buyers, almost 82% of all first-time home buyers of our portfolio is first-time home buyers, and that's representative of the borrowers here in this county. Last year we had 44 mortgages 44 homes that generated mortgages were FHA mortgages here in this county, and that represented over $5 million of home value. Currently, loans in force across the county, we have 306 FHA mortgagees here in the county. And then as we get closer to Pueblo, that number dramatically increases. But again, we serve substantially other counties, but usually, again, you're going to find yourself using USDA as you get farther away from any of your urban centers as you get out of town. So that's kind of the overview. We have two primary products that FHA serves the communities with, and that's the 203B and the 203K loan. Typically, if you hear about an FHA loan, that's your 203B. That's your forward mortgage. That's the one you can go to your bank and they go, you're going to get FHA. You're going to pay your upfront mortgage insurance premium. You're going to put down 3.5% unless you're using a government-sponsored down payment assistance program. If you're using a local nonprofit, you still have to do the 3.5%, and that's what you're going to be. You're seeing the largest proportion of all FHA loans are that type of loan. The 203K loan is one where you can buy, and I heard a gentleman talking about rehabilitation. That's the loan where you can actually buy a home with an FHA loan, with an FHA mortgage, and then you get escrowed money in order to do repairs and other energy improvements. We have other types of programs for disasters and energy efficiency, but those are predominantly the two loan types that we serve your market with. I'm more than happy to answer any questions at the conclusion. I know Tammy can answer for the realtors any underwriting questions that we might have, but I think that one of the great things about coming out to these communities is sharing this information, because you have a lot of your neighbors are using these FHA loan products, and it's always nice to get out and talk a little bit about with the people that we serve. So,
Where do people go to apply for a loan from
So-
this area?
okay, great question. So FHA only goes through lenders, right? So we don't issue loans directly to the general public. So if you go to your local bank, you're going to have a portfolio of loan products that your mortgage lender will recommend to you, whether it be USDA or FHA or a Fannie or a Freddie traditional conventional mortgage. And so really it's through those lenders. We insure, your mortgage insurance premium goes to insure the lender who's making that loan, which makes them more liberal with their credit standards typically. And then if there's a claim, we pay that claim to the lender who made the loan or the investor that bought the loan. But one of the great things I didn't mention, and that kind of brings me back to something, is that one thing that FHA requires of all of its lenders that we insure are disposition strategies. They can't just foreclose on you. Their servicing standards mean they have to work with you. They are required to demonstrate to HUD that they have worked with you to try to make sure you stay in that home before they can foreclose. That's something that conventional lending does not have.
The reason why I asked that is because the first house I bought back in the 70s, my wife and I first got married, we went to FHA for housing. But it's changed, it looks like, since then. Because we did have a local office here at the time.
Oh, really? Yeah. So now all we do is we work with our lenders to make sure we try to provide as broad coverage of our products in communities as possible. There are communities, I must say, Trinidad is not one of them. You do have FHA lenders here, represented by the number of FHA loans you have here. But we do have communities actually in certain parts of the country that don't have FHA lenders locally. So that doesn't mean you don't have access to FHA lenders. In fact, the largest number of FHA's loans done nationally are actually done by Quicken Loans and others that are non-depository banks. So those online lenders can also provide access to FHA loans for rural communities.
And just to add to that, some of the products that the Division of Housing has that we don't have here in Trinidad at this point, but we have a down payment assistance program as well, that you could look at establishing that actually could then provide money. It could be used in conjunction with FHA or some of the other programs you're going to discuss today to help you get those loans brought down to a more affordable level that you were mentioning was kind of a problem here in the Trinidad area right now. So something you might want to consider expanding into.
Yeah, and to expand on that, and I think it's a good segue to CHAFA. CHAFA actually is the intermediary funder for all the Office of Housing Counseling agencies that HUD has. So we don't, FHA no longer has a part of the Office of Housing Counseling, but we work, specifically my division, Tammy and myself, we work with the nonprofits in the communities to approve them to be able to provide secondary financing to buyers through these nonprofits that CHAFA funds. That's a really great way to get some extra money if those programs are available in your communities for your low to moderate income home buyers.
Georgi, do the realtors in town market the FHA? Because I haven't seen anything in our local newspapers. How do they get the word out to the people? And I'm not sure if Steve, if you have that information or not. How do you guys market that?
Well, Jim would.
It's more of an
That's work with the
individual.
lenders.
We don't market specifically FHA. What we do is we get to know our clients, a little bit of their financial history, then we take them to different lenders that could fit that need. Usually right away we'll know if they're going to be an FHA buyer when we get them to the client. And even if we think they're gonna need some CHAPA down payment assistance, we know where to go to get that.
So it's your loan officers within the lending institutions you have in Trinidad area that are the experts on what type of loan programs are available. And as they consult with the borrower, they qualify them into a particular loan program. And they'll say, oh, you got outstanding credit, really high FICO score, you can put 25% down. Your best interest rate is a conventional loan program, Fannie Mae, Freddie Mac. A borrower struggling credit-wise, doesn't have down payment, then they might do an FHA loan with a grant from CHAPA for zero money down, and they do the FHA loan, or they could come to USDA. That lender would say, USDA has a great loan program for you. You meet their income requirements. FHA doesn't have an income requirement, but we have income requirements. You meet those income requirements, zero money down, and so they steer them to USDA. So it's your loan officers within the institutions that do that. Now, do they advertise to the public what's available? Typically, no, they don't.
Do all the banks locally here participate in these? But out of the 4 banks that I can think of, how many, they don't have to say who they are, but 2, 4, how many?
I would say 3 that I know of do FHA. 1 does USDA. And then
I've not heard of anyone, any lender down here offering CHAPA or pushing it.
Christian Jerilynn.
But
He does.
that's
Yeah. Yeah.
in
Jennifer
Denver. In
mentors
Denver, we have lots of lenders that
First National Bank is
We're aware.
partnered with Cherry Creek Mortgage, I believe, and they do offer it. So, and Jennifer's very good at letting people know. Very good.
And if I could ask, next time if we have someone that has a comment, please come to the podium so that way people in the audience back online can hear your comments, because I don't think they may have picked up you on the microphone, if you would, please. Thank you.
Okay, I guess we're ready for the next one. Jerilynn Martinez for the Colorado Housing and Finance Authority.
Thank you so much. I'm Jerilynn Martinez with CHAPA, Colorado Housing and Finance Authority. It's a pleasure to be here today. Thank you for hosting this important conversation. Thanks to all in the audience. I also want to give a shout out to Kathy Garcia, who's not here, but who was instrumental in putting it together. So thanks to her. And as you can tell from the discussion in the room, we are pleased to be a partner of many organizations here represented. CHAPA, let me just start by saying what CHAPA is not. CHAPA is not a state agency. We are also not a federal agency. Not that there's anything wrong with that, but there's often a lot of confusion, and folks think that we are a part of the state. We're not. We're separate. We are what's called quasi-governmental. We were created by the state, but we don't get any direct state appropriations or any direct federal appropriations. We go out and we raise our own proceeds through the private market, and then we also administer a number of programs on behalf of state or federal organizations. We are an investor in affordable housing and in economic development. That is our mission. That is the bottom line, what we do. And we are designed to serve the entire state of Colorado, and that's it. We don't serve anywhere outside of the Colorado market. In our 40-year history, we've invested over $13 billion all across the state. And those investments have come all along the stream of that, what we call the housing continuum. So from permanent supportive homeless housing all the way to first-time home ownership and repeat home ownership, our investment spans the gamut. I'm going to talk a little bit about our home ownership programs first, just because that's where we were last having the conversation, and then I'll talk about some of the others. On our home ownership programs, we are most known for our home mortgage loans and our down payment and closing cost assistance. So we partner with FHA. A lot of our loan products will have that FHA mortgage insurance on them. We also have conventional products available, like FHA, and like we were just talking about, we are not an underwriter. So we work with a network of participating lenders. We have over 100 participating lender organizations, lots of times with multiple branches located throughout the state. And interested homebuyers can go to any of our participating lenders to get access to our loan programs or our down payment and closing cost assistance. Our down payments come right now in the form of either a grant or a silent second mortgage, and it totally depends on whatever the borrower's situation is and whatever their needs are. You can get a little bit more in terms of an amount if you go with a second mortgage than you can with the grant. And the grant really is a grant. People don't often, it's a grant that you don't have to pay back. You still pay back your first mortgage loan like you would, but you don't have to pay back that down payment closing cost assistance. The second mortgage, you do pay it back. It's a 0% second mortgage, so it doesn't accrue interest with some of our programs, but you will pay it back either when you go to refinance or when you go to sell the property. So that's how that works. And the down payment assistance is huge for a lot of people. We hear all the time that there are folks who are just doing great making their rent payment, but they have a hard time saving up for what is required to bring to the table in order to close. And yet in every other way, they are a perfect candidate for home ownership. And we would love to support them, and we do love to support them in pursuing that home ownership opportunity. We are a passionate supporter of down payment and closing cost assistance because we see the way that that can really help make that dream a reality. We supported 8,000 home ownership customers last year all across the state. So far this year, I looked just before I drove down, we've invested $1 million this year just in Trinidad alone. So we look forward to working with lenders in the area and the real estate brokers in the area. Again, our products and services really are made available through those networks, and we do a lot of outreach, but we always welcome the lenders and the brokers coming straight to us. We have resources, marketing resources and collateral material that we can help co-brand with you so that you can make that available to your customers. I want to make sure that everyone's aware of Caroline Traney. She's our new Southern Colorado Community Relationship Manager in the area. She just started this week, and we are so thrilled to have her because we know that there is such a need and an appetite for the information in the area. So please reach out to Caroline or myself or anyone on the CHAP team. We can help you get those resources. The other really important piece that we are a believer in on the homeownership space is what was being mentioned earlier, and that's the homebuyer education. We are a huge sponsor of homebuyer education all across the state. We offer free in-person classes to anyone who's interested in taking them, whether you're getting a CHAPA mortgage or any of our assistance or not. The in-person classes are for free. We really want folks to feel comfortable going in and finding out, is home ownership right for them at that point in time? And do they have the budget in place? Are they familiar with the jargon and the forms that they're going to be asked to complete? We want them to feel empowered before they go take that next step and start talking to the lenders and start talking to the realtors and start talking and shopping for a home. So we offer those classes statewide. They're also available online. There is a fee if you take them online because it's just the fee of providing that online service. But if ultimately the customer does end up getting a CHAPA mortgage, the fee they pay for that online class gets applied to the $1,000 minimum contribution they have to bring to the table. So it's a nice way to make sure that investment in the online classes is still being maximized. I have a schedule out there of all of our homebuyer education providers and the classes that are available in the next couple months. I have flyers for our down payment assistance and loans. And I'm just going to spend a really brief minute. The other work that we do in housing is in the rental space. And we are not a developer ourselves, nor are we a property owner ourselves, but we are a lender. So we will do the permanent financing. We partner a lot with HUD, our partners at HUD, on the permanent financing for multifamily developments. These are developments that are going to be income restricted and rent limited to support low and moderate income households. We are also the statewide allocator of the federal low-income housing tax credits, which pleased to support the Space to Create project with the federal tax credit allocation, and then also the state tax credit, we allocate that as well. So I'm going to pause there, but happy to answer questions, and Caroline and I will be out there at the table, and thank you again for having us.
These classes that you say they're available for new buyers, are they held by the lender in the lender's office, or where at?
The classes are held by nonprofit housing counseling agencies. So it is not a class that's held by a lender, it's held by a nonprofit. That's part of the benefit, is it's not necessarily, there's no pressure, there's no sales pitch that comes along with that. It really is truly just to go, learn, inform yourself with some tools, and that way you feel like you're ready to go when you are going to take that next step and talk to them.
Is there any nonprofit in town that offers those classes?
The Tri-County is the one that's closest. There's also one in Pueblo.
The Tri-County, that's in Howard?
Yeah.
So the Council of Governments does not offer that anymore?
I have the list right here. I can look really quick. We were looking earlier, and it was the Pueblo and then the Tri-County Housing. Yeah, those were the two. There are also a few organizations that are their service areas statewide, like Brothers Redevelopment and CHAC, and they will rotate the location of their classes. I was looking, and on the schedule now, the closest one is in Colorado Springs, so not super close, but they move around. So,
Thank you.
yeah.
And your younger generations like to do everything online, Mayor,
Right.
so that they do it all
What
online.
is the fee that is associated with the online class taking?
It's just under $200.
Okay.
Yeah. And again, that can be applied to your $1,000 minimum contribution for a CHAF loan. I can't speak for others, but for a CHAF loan,
One other small question I have is, you mentioned that the grants, is that only for the closing costs, or is that for down payment as well?
either down payment or closing costs, just whatever the borrower is needing.
And I'll put 2 cents in before I give my pitch, but with CHAFA, because our loan program is zero money down, you can do a CHAFA in conjunction with a USDA loan, and it'll actually be used then to buy the principal amount of the loan down. So the borrower then, an example, was buying a $100,000 home, could borrow $97,000 from us because CHAFA would be giving them a 3% grant. So it helps them qualify, not a lot more, but a little bit more.
Okay, next we have Eileen Hearty with the U.S. Department of Housing and Urban Development.
Yes, thank you. So it's a nice segue from single family development and then into multifamily. So I'm Eileen Hearty. I am the Division Director and Satellite Office Coordinator for the Office of Multifamily Housing in Denver. The Office of Multifamily Housing with HUD has 5 regions. We are in the West region. Our regional office is in San Francisco, and Denver is our satellite office. Within our Office of Multifamily here in Denver, we have a production side and we have an asset management side. The programs that we have are FHA insurance. It's very similar to what Jeff was talking about with the single family, that we do not provide the loan. We work with a multifamily lender, a MAP lender. It's the multifamily accelerated processing. And so a prospective borrower would go to the lender, who is a MAP approved lender, and would work with them, and then in turn that MAP lender would come to us and submit the mortgage insurance application. We have 2 main loan programs for the development or rehabilitation and acquisition of multifamily properties. It's the 221D4 program, is for new construction or substantial rehabilitation. And then we have the 223F program that is for a refinance or acquisition of an existing multifamily property. We also have what's called a risk share program, and that's where we work hand in hand with CHAFA, and the loan is, as we just heard, it's more for the affordable product. And then in addition to that, in order to try to encourage green development, if you are doing your refinance and acquisition or your new construction in an energy efficient manner, and you have chosen a green building standard, you will see a reduction in your mortgage insurance premium rates in order to encourage that. And then we also see a reduction in the MIP for affordable developments. So in addition to that, we have the subsidized portfolio, and some of our subsidized portfolio actually is on top of our insurance, or sometimes it's just by itself. So you might think of Section 8. So there's 2 types of Section 8. We have the tenant-based vouchers that your housing authority is administering, and that's through our public housing, and that's not our program. The multifamily office has what we call project-based rental assistance, and so those are Section 8 contracts that are on a multifamily property. Now, there is no new Section 8 money. It's a finite resource, and one of our priorities in our office is the preservation of that resource. When an owner's contract is coming up to an end, they have the option of opting out of that contract. We do everything we can to work with that owner to try to preserve that housing. Maybe it's looking at a 223F loan to recapitalize and make that property available for the next 35 years and keep it affordable. But sometimes it's a private owner and they have made the decision that they are opting out of the program. We do have a small, very limited ability to save some of that subsidy, and it's we're not very creative with our names. It's called the 8BB program. So it's literally from that section of the Act, Section 8BB. And so what that is it allows us to take the budget authority from the existing contract that is opting out and move it to a new property. So that is the only way to get new Section 8 onto another property. So what we do have is a list. We can never steer where that 8BB budget authority goes, but we have a list of owners who are interested in receiving the 8BB. So if you are interested, if you are a owner of a multifamily property and you would like to see some Section 8 come into your property, you can send an email to den.incoming@hud.gov. That's den.incoming@hud.gov, and you can ask to be put on the 8BB interest list. And so then if there is an owner that is opting out, we make sure that they have the list of the interested parties to get that new, or to move some of that budget authority. Unfortunately, because we have to be budget neutral, it's never a one-for-one. So it could be a property that has 50 units that's opting out. It doesn't mean that we're going to be able to fund 50 units over at the other property. There is a whole calculation that we have to go through to make sure that the budget authority does not go higher. So in addition to that, we have our capital advance programs, and that's the Section 202 and the Section 811 programs. And Section 202 is specifically for elderly, Section 811 is specifically for people with disabilities. We were doing some new construction with a capital advance on those properties, for those types of properties, but that stopped a number of years ago and there has been no new money. But recently there has become, Section 202 money has become available, and our headquarters office is in the process of putting together the NOFA, the Notice of Funding Availability, for the new Section 202 loans, or programs. We're not sure how it will be structured, if it will be as it was before, a straight capital advance, or something else. So we're waiting to hear more about that information. In addition to that, our current Section 202 capital advance properties are starting to become on the older side. We consider 20 years older, but we won't talk about what we consider old. So we do have the rental assistance demonstration program that is going to be opening up for the Section 202 properties. And so this is RAD for Prax is also what it's called. We are waiting for that notice and guidelines to come out, and we're expecting that to come out later this fall. And that will allow our Section 202 properties to recapitalize and again look to remaining affordable and decent, safe, and sanitary for a number of years to come. So I have a number of handouts out there that I can talk to you about. I am on the asset management side. I have some great colleagues on the production side. Mark Philmeyer is the branch chief for production underwriting, and he is a wealth of resources if you are looking at one of the new loan products, the 221D4 or the 223F or the risk share. So thank you for the opportunity to be here. Thank you, Mr. Mayor. Thank you, Mr. Councilman.
I do have one question. You said there were no more Section 8 dollars. What's the reason for that? And the second question to that, do you anticipate any dollars available in the future?
So Congress is the appropriator of our funds, and Section 8 dollars stopped in the 80s. So we do not control whether or not there's any available. That would be your on the Congress's side in determination.
You know, with the increase of the population of the country, you would think that they would take a look at that, and especially with there's a lot of low-income people out there that need housing.
Just to add a little to that, Carlos had mentioned this $15.2 million that Division of Housing has. That money actually can be used not as traditional Section 8, but as a rent subsidy program that mimics Section 8. So on the permanent supportive housing project, there is the ability to attach use housing assistance vouchers to those properties. So that is acceptable use of those funds.
How large is the portfolio for the Section 8 housing?
Oh gosh, I'm sorry, I do not know the answer to that, but I can certainly get it for you.
Be interesting to find out. Maybe, what's it called, that locally here?
Yeah.
Okay.
Thank you. Next we have Tamara Pritchard, U.S. Department of Housing and Urban Development.
Hi, thank you. Thank you, Mr. Mayor and Mr. Councilman Lopez. I'm really just here in a support role for Mr. Burton for policy and program questions. I do want to mention a couple of things that make FHA attractive, and that's the low down payment. It's a 3.5% down payment, the lower FICO requirements that you're not going to find with conventional higher ratios, which is going to mean more to the lenders and the realtors in the room. We have loan limits, which you're going to be fine with here in Trinidad based on your housing prices. We don't have any income limits, but USDA covers a lot of stuff that we don't, because they don't have a down payment. But for our down payment, you could use CHAFA's grant. So we all work so well together. That's all I have.
Now, you said that there's low down payments and low interest rates.
I didn't say interest rates.
Oh, I'm sorry.
That's okay.
I'm just making sure I'm getting my notes right.
Wait.
Okay, I'm just
Low down payment,
Okay.
so it's a 3.5%, and that's pretty much for, I want to say every product we do, without getting myself in trouble.
No, I'm sorry.
That's okay.
I'm just trying to.
You're
trying
wanting
to
to
get
hear
quickly.
low interest rates.
I did. I'm not gonna lie.
I can see that.
But there's no income limits for.
We don't have any income limits. We do allow a lower FICO. You might have heard that, for credit.
Thank you.
Absolutely.
Okay, thank you. Next we have Scott Wilson, U.S. Department of Agriculture.
Thank you. Thanks for inviting me. So we have a bunch of different programs that I'm going to share with you, and some of them are housing related and some of them are more development related. But since we're talking about housing, we have a 502 guarantee loan. It's like the FHA loan where the local lender makes the loan, we just insure the loan. We do have income limits. Our income limit on the guaranteed program is between the 80 and 115% of area median income, and for the county that you're purchasing in. But it is zero money down, and so that's a great loan program. We have a 502 direct program where we actually make that loan ourselves. So we are the lender in those instances. Under that program, there's an income limit, and that targets the borrower at 50% of area median income or less. In that program, we're allowed to stretch the loan over 38 years, and we're allowed to subsidize the interest rate down to 1%. And by doing that, we can take a borrower who would normally only qualify for, let's say, $75,000. In some cases, they might qualify for $150,000. And so those are our two basic housing programs that we have. The direct program does have a sales price limit, and it has a home size limit. So you can't buy a home that's greater than 2,000 square feet, and that limit for sales price is based on the county you live in. And so it will vary, but typically most of the counties, unless you're in the real high-end counties like Summit or Garfield or Eagle or something like that, are about $230,000 is what the limit is on the direct program. We have a 504 repair loan and rehab loan and grant, and so that program is for people who already own a property and properties that have health and safety issues or energy efficiency issues they'd like to rectify. They can come to us and either borrow money on the loan or get money on a grant. So the grant is available to those that are 62 years of age or older, and they don't qualify for it. So there's no FICO score requirement or income requirement. But we will look at their income in determining how much of the grant they can get. The max of the grant is $7,500. And in many cases, if a borrower has, Social Security income or disability income, we might not let them have the whole $7,500 if that's their need. We might match it with a loan, so they would get, and it's based again on their total debt to income ratios, and there's a calculation involved. But if they didn't have a lot of income, they're more likely to get the grant up to $7,500. That can be done in conjunction with a loan. Like I mentioned, our loan for that program is $20,000. It can be amortized over 20 years at a 1% interest rate. So if a borrower has, a lot of home repairs that they need to do, deferred maintenance, there is no better way to finance that. 1% interest rate is almost free, 1%, and amortized over 20 years means that they could borrow the $20,000, and their total payment would be around $95 a month on that. Outside of those 3 programs that are geared towards those buying a home and or repairing a home, let me mention one thing about the guaranteed loan and the direct loan program too. Those are for existing homes, but those loan programs are also there to help people build homes from scratch as well. So either borrower, I'm not sure of your marketplace, but in a lot of our state, there's a lack of inventory, and so you get a qualified borrower, can't find property to buy. Well, the only way they can guarantee themselves home ownership is to build it themselves. So then you can hold their hand, help them find a lot, find a builder or a dealer who does manufactured housing. So we can do a manufactured home, a modular home, or a stick frame constructed home on site, and they can use either one of those 2 loan programs to do that with. We have a self-help program, so if you have anybody in the room that's part of a nonprofit organization that wants to help borrowers, help them build their home themselves, we have grantees across the state. We have 5 different grantees, none down here that specialize in your neck of the woods. Closest would be in Alamosa. But that 523 self-help program is a program that they would get approved through USDA to run a program that would help homeowners build their own homes, like Habitat for Humanity. So our self-help program's been around 50 years. We've helped over 50,000 people get into homes by building their own home. We are bigger than Habitat for Humanity. Habitat kind of copied our model, but people aren't aware of our model. Habitat does a much better job of marketing their model. So that's available. And then we have a 524 site acquisition and development program for nonprofits or governmental agencies to help do development of communities. So it's a loan, it's not a grant. We have the authority to approve up to $400,000 in the state of Colorado. Our state director can approve that. If it's over that amount, it would go to the national office. It's a 2-year loan. There's not a lot of money nationally for that program, but it's amazing nationally not many people borrow it. I know that there's other programs out there that are more flexible, and that's probably why the nonprofits use them more than they use our program. But our loan is, the interest rate on it right this moment is 3 3/4%, and it's a 2-year mortgage or 2-year loan where you just pay interest only until the site's developed, and then you're going to start paying USDA back as you sell lots off within a particular site. So those are our really 5 kind of programs that USDA has to offer, and I'd be happy to share, more specifically how they work with anybody who's interested in after the meeting.
The major question that I had is that early on when you started talking about the housing units, housing stock for sale, I think you mentioned 59 units, correct?
Oh, I'm sorry.
59 units were available. Regardless of the number, how many of those are actually do qualify for, HUD money or USDA money because there are certain qualifications they have to meet? And how many are outside those parameters that people, that you guys wouldn't even consider? That's a thing that would be of interest, and I think the realtors probably might have more answers to that than anybody in the room. So, does anybody in the room might have an answer to that?
Well, I can't speak to the price point necessarily of all the homes, but I can share that right now, statewide, the average Chaffa customer is getting a loan amount of around $250,000. So anything below that would certainly qualify, and that's the midpoint. So there's above that as well.
They've got to meet a certain standard, like, plumbing, electrical, et cetera. So that's the question.
Quality of the home.
The quality of the home. I do know that there are a lot of problems with some of the existing stock in Trinidad. I do know that's a problem, or has been. I'm not sure where it's at. So that's where I see you shaking your head. You want to come forward? Do you have an answer to that?
Couldn't that also be reflected when the insurance companies mandate that they get these repairs performed before they could even insure them, and therefore that could, through a separate arm, make the improvements occur?
We have a minimum property requirements, and again, your realtors in the room should have a pretty good idea of what your housing stock looks like, the age, I'm guessing, I don't know. Nobody's like, I'm getting blank stares. Okay,
Nobody
that's
wants
better.
to come stand.
Nobody wants to, come on, somebody get up here, thank you.
I'd like to inject one thing. That's what the 203K program is phenomenal for. So if you have housing stock that needs repairs, that loan program helps a borrower with very little down buy the home, but borrow all the money that they need to repair the home too, all in one loan. Then that money, and then they buy the home, it closes, all that money gets set aside while the repairs get performed, and then the money's dispersed to the contractor.
You should come work for us.
Could you state your name, ma'am, because you came in a little bit later after the signature?
It's Danielle Rollo, Southern Colorado Realty. I would have came prepared with more statistics if I would have known that they were going to ask these questions. But the aging housing stock is a problem in our community. Out of the 59, I don't know exactly because I don't have the list in front of me. But if I venture to guess, under 100,000, it needs plumbing, it needs wiring, it needs roofs. And it is definitely an issue, for sure. 203K loan, I've only been 20 years of selling real estate, I've only done one. So,
you know what what you have to do is get your hands on a lender, and it's in times like this when everybody needs to learn and grow and find a way to make things work. You find a lender who wants to learn, and they make that a product that they're going to sell and they're going to do on a regular basis, and then they're going to be successful at it. And it sounds like something that you need, because you can take that property almost down to the ground. You still have to have some of your foundation, and I don't know, you would know better on that. But that would be
The typical challenge, and I get what you're saying, with the 203K is finding a lender in a community that's willing to go through the management process to do it. For us, it's the same. For the lender, they have to have an escrow, they got to manage the escrow, there's home inspections before the escrow can be released to the contractor, and then they have to close out the construction process. All that has to be done before they can file for their insurance, for the FHA insurance. So it is a longer process, and it's much more integrated with the lenders who are involved. So we do have significantly less lenders that do these rehabilitation loans and others. But I think that Tammy had a good point, is when we talk with our nonprofits and we talk with our partners like Jaffa, and we have 17 states we work in, Tammy and I, and we visit all the nonprofits in all of those states, and one of the messages is really that's a community opportunity. I don't call it a problem. It's an opportunity for the community to work with those lenders to support the rehabilitation that needs to do, because we all know that it doesn't matter if you're a Denver or you're Trinidad. There is gentrification that needs to be done in every community, right? Whether it be Main Street USA or whether it be your housing stock that is in the periphery of your community. And there's not enough money from homes funds and CBDG, and grants from DOLA to revitalize an old housing stock. The only way to do it is to make it have the opportunity for people who are going to live in those homes to bring them up to a standard that the community is going to be able to accept. And I mean that from a health and welfare kind of standpoint. So, if you can find these lenders and encourage your existing lenders to expand their portfolios, that's really the opportunity, because again, most of the mortgage products and the revitalization products you're going to see are not going to be government lenders or direct loans like USDA has set. It's going to be the community getting their community partners to work for the community as well.
and that's super important because FHA, CHAFA has certain requirements, USDA, all the properties have to meet a certain standard.
right, because we want to protect our home buyers.
Absolutely, but our aging stock doesn't allow it. So the 203K is
Would be
definitely
perfect.
a need.
Really just need two lenders, and then they can compete
Not
against
to
us.
steal
right.
FHA's thunder, we do the 203K on all our loan
I heard
programs,
you saying that.
but we don't call it a 203K. So it's just a rehab that's in conjunction with the guaranteed program or the direct program.
So we would contact USDA directly on
Yes, if you're doing a direct loan, you can contact USDA directly. If it's a guaranteed loan, I have a flyer of one of the companies that offer the guaranteed construction loan programs, and I can put you in touch with them.
So either way, you've got an option. There's options here, and those are the options, it sounds like, that you need. Anybody can
Community needs
refinance,
it.
anybody can purchase.
Here is your challenge though, when you talk about doing that 203K and or a rehab with our agency. In many instances down here, the cost to do the rehab plus the sales price would make the home cost more than what it would appraise for. The FHA loan program, if the lender doesn't put an overlay on it, would allow you to borrow 110% of what the appraised value when the property's finished. Our program does not. It only will lend you 100% of what the appraised value is when the property is repaired. So that is going to be your biggest challenge in trying to get, because a lot of repairs are what we call deferred maintenance repairs. A roof's a roof, and if it costs $20,000 to put on, it doesn't make your house worth $20,000 more. Wiring, furnaces, water heaters, windows. So
I still think this is a viable option, though.
Yes.
I think if we all work together, we can figure it out.
Absolutely.
Absolutely.
Because they're community tools that you can use.
Right.
And I don't mean to, but whether you find a way to do property tax abatements, or you try to find a way that the city can use can use development funds and things that they can get from other sources. You can't fix everything at once, but you can definitely target areas. And I've worked in a lot of rural communities even before HUD. And a good way to do that is it really is a community. Is to say, okay, we're going to work on for instance, in one community I worked in, they knocked the city ended up condemning substandard housing that was vacant. It was a process, and it was horrible, and people were not happy. But in the end, they were able to knock down some things, and then you had a lot that could be built on that was, and actually it was a series of lots in this neighborhood that was right next to downtown. And then they did assisted development, right, where there was a loan for sweat equity kind of thing, like you were talking about, and they created a whole new subdivision, kind of in the urban core, not urban, in the rural core, and then everybody was happy, and it was it cost pennies on the dollar for the rehab that they couldn't have done if they would have tried to. Someone would have individually tried to buy the house and fix it up. It wouldn't work.
Oh,
So,
and one other thing I just wanted to throw out before I sit down is multifamily housing. Rental property, that is our biggest immediate need. We do definitely have a shortage in rental properties. And so I liked hearing the different programs that are available for investors, because we do have them. That are looking at Trinidad to build that, and we need it.
Yeah, we do.
Affordable housing is needed everywhere.
I do have a question, Danielle. Do you guys have a realtors association?
We do.
I think they mentioned that would be probably maybe a start when you have your meetings to maybe go to the banks and see if you can get someone to jump on board to get a feel as to whether they want to participate in these programs. And I think that would maybe be
Talk to some appraisers.
Yeah.
And to that comment,
See if it's even, I heard a laugh.
what is a tool that you have found that lenders have been more willing to do these programs with you all? Because it sounds like there's more criterion in order to get these programs off the ground, all the steps, the litany of those. What have you found has worked in order to get them to be more viable in performing them? Because, the money seems like it's more consistent, it's there, but there's just more steps.
So it's two things really. It's demand and education. Right? Without demand, there's no supply. Right? So if you don't have borrowers who want to do rehab loans, because again, in this market, for instance, I'm going to say this mortgage market, you can get a bridge. It's less than it was in 2004, 2005, where you can go and get a repair loan and get a bridge loan and then do attempt to perm kind of a relationship. Those are a lot more limited now. So the lenders didn't have to do these for a very, very long time. So the demand went away, and so did the knowledge of these products. So a big part of it is these lenders knowing that the products aren't that hard to really administer. They are a little bit more time consuming, but if there's a demand for it, then the supply will come. So it's really about a community saying, you know what, this is something we would like to see. It's really about, and then HUD, bar none, and I know USC is the same, and Chaffa has huge resources for educating the lending community. Chaffa works with tons of lenders on the third-party side to empower communities and local banks to be able to supply lending resources. to communities. So it's really about that. If a community can convince bankers that, hey, this is something we want to explore, will you explore it with us? You know, the resources for that education are there. If the demand never comes, then that's fine. They still have at least they have the education. But if the demand does come, then they become proficient at it, and it becomes much easier. It becomes a matter of scale. So that's really how I see it.
I think if you called your bankers, your local presidents of the banks, and said, hey, we would like to have this team come down and explain to you all that they have to offer, because we've seen that there's a big need at this stage in the game. Would you guys be open to come to a meeting that you host and invite them to, and then have us come and share all the same things we shared today?
We just had one of the banks in town that was taken over by a bigger company, and maybe they're a little more open to some of the products that are out there.
And I think a lot of it is also just being willing to take the time, because there's some old myths from when these programs, way back in the day that aren't true today. And so just wanting to make sure that the community is aware of how the programs operate today. I know one of the long-time myths about CHAP is that we didn't used to have permanent funding. You had to use to dial for dollars, and then we'd run out of funding. And that is such an old...
I used to do that.
Yeah, and that's old school. So we don't operate that way anymore. We have funding available all the time, every day of the year for our home finance programs. But if someone maybe thinks that that's still the way we operate, they don't know.
Appraisers for HUD, same thing. Those HUD inspections you have to get before you can close on a loan. Those still exist. We just this month turned off our our HUD approved appraiser list, because you can use appraisers out there. Now we have minimum property standards, but they're no more difficult, they're no more vigorous than conventional for the most part. So we don't even have a HUD approved appraiser list anymore, because it wasn't, we don't need it anymore, and HUD approved inspectors and things like that. So yeah, a lot of it's myths that these programs are hard and they're really not.
And it's conversation like today, so we appreciate the opportunity today to come down and start the dialogue, and if there's more outreach we can do with the lending and the real estate community, we look forward to that as well.
Last year I bought a house, started to buy a house in June. I asked about a bridge loan, and I was told by the bank they're illegal now. So I don't know where that comes from, but he flat told me it's illegal to do bridge loans.
Yes, sir.
And then with an appraiser, the first appraiser waited 3 weeks before doing any communication, and I'll never forget the quote he put. He said, the house you're looking at, which is in Trinidad, is so remote and surrounded by mountains, there can't possibly be a comparable. And then he went dark for 2 more weeks. And then we tried to get another appraiser. She said yes. She went dark, and then no communication for 3 more weeks. It took 3 appraisers before we got an appraisal.
So it
was a 10 to 12 week process.
I'm sorry, I'm going to try to take this over real quick, because I know we're running close on time, and I want to make sure everyone has the ability to meet with you outside. I would like to ask for any questions from attendees right now. If you have any directly, if you'd like to come forward, please do so at this point in time.
First of all, I'd like to thank everybody for coming down and starting the conversation, because it is needed. I'm a little bit frustrated in that if I'm dealing with a low-income buyer, telling them that they can take a class in Colorado Springs or Pueblo does not help me. It just doesn't. And I don't mean that to be offensive or argumentative. It's just a fact. If you've got a low-income buyer that is scraping to get by and working long hours, they don't have time for a 2.5-hour trip to Pueblo to take a class. And yes, I know a lot of the millennials are computer savvy, but I work with a number of retirees that are not computer savvy. And one of them, she was a very bright woman, could not complete the class by herself online, not because the material was too hard, it was navigating the computer system. So I appreciate what you're saying, but is there any way we can get a class in Trinidad for the homebuyer program?
I so appreciate your comments, and so thank you for sharing them, because I think that is just a true statement for many communities across the state that may not have a facility right in their backyard. And so thank you for being candid about your frustration. The answer to your question is, I don't know, but we can certainly work on that.
That would be wonderful.
The mayor was asking about the COG before, and COG was on our list for a long time, so I'm surprised that they're not right now, and I'll just have to go back and look and see what that's all about. But, you know, again, it's a thank you for sharing your concern. This is a great opportunity to start the conversation, and so while I can't promise and say yes, although I would love to, we can certainly look at something
Great.
that would be closer.
You know, years ago.
Things like that are practical.
Yeah,
Sure,
absolutely.
Application. Another suggestion is telling a potential buyer, well, this loan will help you if you're up to 110% of the median income. What is that for Los Angeles County? Is there a pamphlet that has what that dollar amount is, so I can just hand it to a client without going into in-depth calculations of what it's going to take for them to qualify?
You know
It
what?
discourages
You
them
want-
right off the bat.
If I can get on my phone, once we get out there, I can probably Google it.
Cool, awesome. And then one other thing that I know that maybe you don't have control over, our big problem, as was mentioned, is the appraisal management companies. Do you all go through appraisal management companies for assigning an appraiser? Down here, even with conventional products, we have a problem with an appraisal being ordered. We don't get service in our community. There's a limited list of approved appraisers, and ultimately it can take 8 to 12 weeks to get an appraisal.
I've heard that.
That-
And I have other rural communities as well.
And that is a problem. If you are serving these communities, you need to have a solution, or at least some sort of a plan. I respect the fact that you want the third party in there. It has to be in compliance with the CFPB regulations, etc. But there needs to be some sort of authority that manages then the appraisal management company. It seems like it drops into a bottomless pit, and then the pat answer from your lender is, it's the appraisal management company. And then you talk with an appraiser ultimately if you get a call back, and their same frustration is with the appraisal management company, that third party in the middle, that seems to be frustrating the whole process. And I'm sorry, I'm very nervous talking
you're fine.
about this.
You're clearly very passionate, and that's good.
But
I mean, there's
it
these are
doesn't
issues that
help
we need to know
us
about.
if we don't have practical solutions. And when you have sellers that are like, I don't want to work with FHA or VA, I don't want to accept them because of the time frame it's going to take to bring the property up to the minimum standards, or just to get an appraisal. So that is some of the practical stuff that we're dealing with on this side. And again, I appreciate your programs. I've used them in the past. They do help people. But right now, especially in our tight market, we have a lot of sellers that just don't even want to entertain a 203K or an FHA because they think that they're going to be waiting twice as long to get a sale, a completed sale. So again, thank you for your time. I don't mean this to be a wet blanket. It's just anything that you can do to help make the process easier. And I'm disappointed that I don't see lenders here at this summit because that is a challenge.
Yeah, I understand. Do we have any other questions from the audience, please? If none, I'm going to. Oh, I'm sorry.
Ladies and gentlemen, I'm Tom Murphy from Trinidad Times TV. Two things. I noticed when we started that I was having Wi-Fi problems and it was glitching, so I shut it down right after you guys did your introduction. So when I'm done, if you guys would introduce yourselves, if you want to share your phone number too, and I'll put it in graphics later. I just I shut it down, and so I'm just recording, because if I try to stream it and the audio is glitching, it won't sync. So you can speak to the cameras I have. Second thing is, and I already have a solution. I have a building in town. It's mixed use, which I'm just wondering if it. And I already have the solution. I've got deferred maintenance that I need to take care of, and the bank finally, so we're going to get it done. But it's just under 16,000 square feet. It's a business and a residence. Does that meet anybody's criteria to do something with if I needed to? Really?
We do mixed use all the time.
Really? Okay. Just like the city manager's talking about, whenever we were remodeling the Bankers Isaac, we had nothing to compare this to. So we just do an appraisal, and they say, okay, we'll just go with that. So it's a unique situation, but I just never fit in anybody's, mold. So anyway, the camera's here, guys. Maybe if we could start over here, unless anybody else has any other questions. Again, introduce yourself so that if somebody's watching this later, it'll be up in a day or two on Trinidad Times TV. We have a YouTube channel where we film all the government meetings. So
Thank you, Mr. Murphy. Before we go into closing, if you would all be so kind as to acquiesce to his request, again, just say your name and contact information for our viewers at home.
Bill Simpson, Colorado Division of Housing, 303-887-0986.
Jeffrey Burton, U.S. Department of Housing and Urban Development, Single Family FHA. If you have any questions, please call 1-800-CALL-FHA, and we'll get you right to who you need to go to.
Jerilynn Martinez with CHAFA, Colorado Housing and Finance Authority. Information about all of our programs is on our website, www.chafainfo.com, or our phone number, 1-800-877-CHAFA, CHFA, 2432.
Eileen Hearty, I'm with the Office of Multifamily Housing within the Department of Housing and Urban Development. You can get our information about the Multifamily West region at www.hud.gov, and then select multifamily housing, and they will have all of the contact information, including my line, 303-672-5433, and it will also have all of our production staff.
My name is Tamara Pritchard. I'm with the Single Family Program Support Division in the Colorado Department of Housing and Urban Development. That's a really long statement. My phone number is 303-839-2654, or I can be reached, or you can find anything about our programs at 1-800-CALL-FHA.
Hi, I'm Scott Wilson. I am with Single Family Housing Programs for USDA Rural Development, and my phone number is 720-544-2929.
Thank you very much, everyone, for attending, people in the audience as well. I would like to give a big thank you to Ms. Georgi Clark, who has put this together along with Ms. Kathy Garcia from Senator Gardner's office. Big round of applause for doing that. With that being said, we would like to ask anyone who would like to talk to any of the panelists outside in the lobby area, outside of chambers, please to do so, take advantage of their knowledge and resources if you can benefit from them at this moment.
One thing I wanted to say is, I think that the Council of Governments would be, being that they have a housing program, any of these programs or any of this information or educational, I think they'd be the people to contact, see if they want to introduce that, because they used to do it years ago.
Yes.
Thank you again, panelists, and
Thank you.
Thank you.